Okay, so today we're going to dive into some of the pitfalls of trading,
All right.
and we're going to do it with a bit of a humorous lens.
Yeah.
We're calling it trader rehab,
I love it.
and the reason for that is we're going to look at some things that can really derail traders, even experienced traders.
Absolutely.
And we've got some really interesting source material that uses this concept of trader rehab
Yeah.
to explore things like overtrading, revenge trading, and risk management.
It's so important.
Yeah, and I think what's really interesting is they use a lot of humor to talk about these really serious topics.
It's a great way to make it relatable, you know?
Yeah, totally.
Sometimes these financial topics can feel very intimidating.
Yeah.
And using humor, it kind of breaks down those barriers and helps people
Yeah.
remember the key takeaways.
Totally, and I think it just makes it more approachable.
Yeah, absolutely.
So let's start with overtrading.
Okay.
I think this is something that we've all probably experienced at some point. You know, you're looking at the charts, you're feeling that FOMO.
Yeah.
You know, you're just like, I got to get in on something.
You just feel like you're missing out if you're not constantly in the
Yeah.
action.
And it's like almost like an addiction, right?
Yeah, it is. It's like a compulsion
Yeah.
to trade, to just be in there doing something.
Yeah.
And the problem is that it can really lead to some negative consequences.
Right.
I mean, think about it. You're paying fees for every trade.
Right.
And if you're constantly trading, those fees are going to add up.
Yeah. And you're not necessarily making the best decisions either, right?
You're not giving yourself time
Yeah.
to analyze the market, to really think through your trades.
Yeah. You're just reacting emotionally.
Exactly. And it's kind of like,
Yeah.
you know, I always think about it like an athlete who's overtraining.
Right.
If you're constantly pushing yourself, you're going to burn out. You're
Mm.
going to get injured.
Right.
You're not going to perform at your best.
Yeah. You need that rest. You need that recovery.
Exactly.
So what's the solution here?
Well, I think the key is to develop a strategy
Okay.
and to be disciplined about sticking to it.
Right.
So instead of just jumping into every trade that looks appealing,
Yeah.
you could, for example, decide that you're only going to trade when a certain technical indicator is triggered.
Okay.
Or you could set a limit on how many trades you're going to make in a day or a week.
Right.
So that you're not...
So you're not just constantly...
Yeah, you're not just constantly clicking the buy and sell buttons.
Yeah.
You're being more selective about your trades.
Right. And it sounds like it's about taking the emotion out of it.
Absolutely.
Yeah.
Because that's what really drives overtrading.
Right.
Is that fear of missing out, that sense of urgency.
Yeah.
So if you can take a step back and be more objective about your trading,
Right.
you're going to be much better off in the long run.
Okay. That makes a lot of sense.
Okay.
So let's move on to another big one, revenge trading.
Oh, boy.
This is a tough one
It is.
because it's so emotionally driven.
It really is.
You know, you take a loss and you just want to get back in there and win it back
Immediately.
immediately.
And it's like you're not even thinking straight.
No, you're just fueled by anger and frustration.
And ego, a lot of ego involved.
Yeah.
You know, you don't want to admit that you made a mistake.
Right.
So you try to prove yourself wrong by,
Yeah.
you know, getting back in there and winning it back right away.
Well, we read this story about this guy, John,
Oh, yeah.
who would triple his leverage
Oh, my gosh.
when he was revenge trading.
That's a recipe for disaster.
Yeah. I mean, that's just terrifying to me.
It is. It's scary because you can lose so much money so quickly
Right.
when you're trading with that kind of leverage.
Yeah. So how do you stop yourself from doing that?
Well, I think the first step is to recognize that revenge trading is a problem.
Okay.
It's not a solution.
Right.
It's just going to make things worse.
Yeah.
So if you find yourself feeling that urge to get back in the market and win back your losses,
Right.
take a step back, take a break. Right.
Walk away from the computer, go for a walk,
Right.
do something to clear your head.
Yeah.
And then when you come back, you can assess the situation more objectively
Right.
and make a more rational decision.
Okay. So it's about emotional detachment.
Exactly.
Yeah. Yeah.
You have to be able to separate your emotions from your trading decisions.
Okay.
Because if you let your emotions dictate your trades, you're going to end up in trouble.
Okay. That's great advice.
Right.
So let's talk about the last one, risk management.
Okay.
Now, I used to think that risk management was just about diversification,
Right.
but it's so much more than that, isn't it?
It is. It's really about having a plan
Okay.
for managing your losses.
Right.
Because losses are inevitable in trading.
Right.
No matter how good you are, you're going to have losing trades.
Yeah.
So the key is to make sure that those losing trades don't wipe out your account.
Right.
And that's where risk management comes in.
Okay. So how do you do that?
Well, there are a few key things you can do.
One is to use stop loss orders.
Okay. Can you explain what those are for people who might not be familiar?
Sure. So a stop loss order is basically an order that you place with your broker
Okay.
to automatically sell your position if the price drops to a certain level.
Okay.
So let's say you buy a stock at $100 a share
Okay.
and you set a stop loss order at $95 a share.
Okay.
If the price drops to $95, your order will be automatically executed
Right.
and you'll be out of the trade.
Okay.
So it's a way to limit your potential losses
Right.
because you're not going to let the stock keep falling and falling and
Yeah.
wipe out your entire account.
So it's like a safety net.
Exactly. It's like a safety net.
Right,
And
yeah.
it's something that every trader should be using.
Okay, so stop loss orders, that's one thing.
Yep.
Yeah. Else.
Another important aspect of risk management is position sizing,
Okay.
which is basically deciding how much of your capital you're going to risk on any given trade.
Okay.
So you don't want to put all your eggs in one basket.
Right.
You want to spread your risk around. Yeah.
So a good rule of thumb is to risk no more than 1% or 2% of your capital on any single trade.
Okay.
That way, even if you have a string of losing trades,
Right.
you're not going to blow up your account.
You're not going to wipe yourself out.
Exactly.
Yeah.
And then the third thing I would say is diversification,
Okay.
which you mentioned earlier.
Right.
And that's basically just making sure that you're not putting all your money in one asset class.
Right.
So you don't want to have all your money in stocks or all your money in bonds.
Right.
You want to have a mix of different asset classes.
Right.
So that if one asset class is doing poorly,
Yeah.
the others can help to offset those losses.
So it's all about spreading your risk.
Exactly.
Yeah.
And that's really what risk management is all about,
Right.
is minimizing your risk and protecting your capital.
Okay, great.
All right.
Well, you know what I really appreciate about this whole concept of trader rehab
Yeah.
is that it uses humor to talk about these things,
Right.
which can be kind of intimidating and dry. It can be very dry,
Yeah.
but when you use humor, it makes it more engaging and relatable.
Yeah. I think people remember it better too.
I think so too.
Yeah.
It kind of sticks in your mind more
Totally.
when you can laugh about it.
Yeah.
Yeah.
So what have we learned today? I think we've learned that healthy trading habits
Yes.
are a lot like recovering from any bad habit.
Very much so.
It requires discipline, it requires strategy,
Absolutely.
and it requires a willingness to learn from your mistakes.
And to be patient.
Yeah.
You know it's not going to happen overnight.
And
It's
it
a
just-
process.
yeah.
And you have to be committed to it.
And it's ongoing, right?
It's an ongoing journey. You're
Yeah.
never going to reach a point where you're like, okay, I'm done. I'm a perfect trader.
Right.
You're always going to be learning and growing
Right.
and evolving as a trader.
So if you were to design your own personalized trader rehab program,
Mhm.
what would be your top 3 rules?
That's a good question.
Yeah, what would you focus on?
I think for me, the most important thing is to have a plan
Okay,
and to stick to it.
right.
So that would be rule number 1.
Okay,
Rule number 2 would be to manage my risk.
okay,
And that means using stop loss orders, position sizing, diversification, all the things we talked about.
right.
And then rule number 3, I think, would be to be patient,
Okay,
not to try to force trades,
right.
to let the market come to me,
Okay,
and to be disciplined about waiting for the right opportunities.
right.
So those would be my top 3 rules.
Awesome. Well, that's great advice, and I think that's a great place to leave it for today.
Yeah, sounds good.
So for our listeners out there,
Yeah.
I encourage you to think about what your own trader rehab program would look like.
Absolutely.
What would your top 3 rules be?
And how can you implement them
Yeah.
in your own trading?
Awesome. All right. Thanks for joining us,
Thanks for having me.
and we'll see you next time.
See you later, Stuart.